Hi guys, I'm Nicola McKenzie, founder and mortgage advisor here at Dun & McCarthy Mortgages. And in today's video, I'll be giving you tips and things to consider if you are purchasing a buy-to-let investment property using a limited company. So stay tuned to find out more. Now, before we start this video, guys, I want you to subscribe to this channel if you enjoy the content and hit the notification bell so that you don't miss any more property and finance related videos. And I also want you to consider using DM Mortgages to arrange your next property purchase. So head over to our website, dm.mortgage, and we can help you to find the best mortgage deal for your situation. But now let's get on with the video. Now, this video should help you if you are purchasing or thinking about purchasing a buy-to-let residential property under or using a limited company. If you have decided limited company is right for you, my first tip is just to make sure that it definitely is right for you. I'll be honest, guys, I get a lot of inquiries and we see a lot of clients that contact us, they want to purchase in a limited company. But then when we explain all of the pros and cons involved, they realise that maybe they've not actually looked at it as thoroughly as they thought they had. So my first tip is just to make sure and work out what is right for your situation. Now, to help you to weigh up if buying using a limited company is the right thing to do, you need to get advice on your tax position, and that will probably involve a conversation with an accountant. You also need to look at what your aims are with your property investment strategy. What is it you're looking to achieve? Are you looking to buy one or two properties, or are you looking to build a sizable portfolio? And if so, what kind of income might that get you to? You know, if you're buying one or two properties, is it worth the hassle of setting up and running a limited company? Maybe not. Again, whether or not you buy under a limited company is largely going to depend on your tax position. Generally speaking, limited company purchases are often advantageous for those that are higher rate taxpayers. So again, if you're not a higher rate taxpayer, I'm not saying that buying in a limited company definitely isn't right for you, because without knowing you and your circumstances, it's impossible to make that judgment. But my point is, you just need to make sure that you are making the right decision in the first place. Now, whilst there are many advantages to purchasing property using a limited company, tax being the main one, it's not right for everybody because there are also cons to consider. So things like specialist mortgage lenders, you're not going to find a limited company mortgage on the high street. Unlikely to anyway. Generally, limited company purchases come with higher rates of interest and come with higher fees, and that's not always worthwhile depending on your tax position. So check out my video on the pros and cons of buying in a limited company versus a personal name. Get advice on your tax position and make sure you're making that assessment thoroughly is my first tip. Now, my next tip is to make sure that you set up your limited company correctly. Now, setting up a limited company is pretty straightforward and simple. You can register a company at Companies House online. It costs as little as £12. Now, you also need to ensure that you appoint at least one company director. And if you're appointing more than one director, each shareholder needs to be allocated a percentage share of the company. Now, this can be sometimes an issue because some mortgage lenders will expect all of the named directors to also be named on the mortgage. Let's say that you've set the limited company up with two directors, but one of the two directors has something in their situation that makes it difficult for them to obtain a mortgage. That might have implications on your mortgageability. And another thing to also consider is that some lenders allow only a maximum number of directors to be named on the limited company. So again, when you're setting the company up, you just need to really think about, and it's probably a good idea to get mortgage advice quite early on to make sure that the company is being set up and structured in the best way to keep your mortgage lender options as wide as possible. Now, the next tip, and this kind of leads on from my last point, is to consider what's called a special purpose vehicle. You will often hear this abbreviated to SPV. Now, a special purpose vehicle is dictated when you set up a limited company by what's known as the SIC code. SIC stands for Standard Industry Classification, and that basically is saying or stating what your business relates to. What is the purpose of the limited company? Now, the majority of limited company mortgage lenders will expect the limited company to relate to certain property related activities, and that will be determined, like I say, by which SIC code you select when you're setting the limited company up. If you've already set the limited company up, then this is a simple thing that you can check using a Companies House search. Companies House will tell you what the SIC code of any business is. But there are 3 common types of property related SIC codes that the majority of limited company mortgage lenders will expect to see on a mortgage application. So I'll put those SIC codes in the description, but of course this is going to be dependent on which lender you are using. Now, my next tip is to ensure that the investment is going to pass stress testing applied by lenders. This isn't really unique to limited company mortgages, to be honest. Anybody investing in buy-to-let should make sure that the investment is going to be profitable enough to meet the stress testing applied by lenders. Now, there are 2 key stress tests here that lenders generally apply, and this is going to vary from lender to lender and even from product to product in some cases. But lenders will basically stress test assuming that the mortgage was going to be paid at a certain rate of interest, even if the actual rate of interest at the time of arranging the mortgage isn't that high. And then what they'll say is that the rental income has to be above a certain amount in order to cover that rate of interest. Now, as an example, a lender might say that the rent needs to cover the mortgage interest payment, assuming that the interest rate on those payments was 5.5%. Even if this isn't the rate that you'll actually be paying, you might be paying less than that. But they'll then go on to say that it has to have a coverage of 125%. So this is what's called the interest cover ratio, or the ICR. So if we look at that in practice, let's say that we're borrowing £100,000 and the monthly interest payment based on an interest rate of 5.5%, that would work out to £458 per month. However, as the rent needs to be 125% of that figure, this would mean in this example that the rental income needs to be at least £573 a month or more for that particular lender to lend the money that you've applied to. Now, if I generalise, most lenders will assume an interest rate of somewhere between 4.5% and 5.5%, and they will use an ICR, an interest cover ratio, of generally somewhere between 125 to 145%. Now, what your ICR is can sometimes even depend on whether or not you're a higher rate taxpayer. There are other factors to consider, but I would say to use that calculation as a general rule of thumb would be a good starting point. Now, you also need to adhere to additional responsibilities as a limited company owner. It's essential that you maintain accurate records, company and accounting records, but you also must submit confirmation statements, and that's something that you have to do every year within 14 days of the anniversary of the company's incorporation date. So there's other things as well that you need to take into account when you're running a limited company. Things like annual accounts, tax returns, you have to submit, etc. Now, if you do have an accountant, then they will usually take care of most, if not all of those things. But again, the cost of the accountant doing that is going to, you need to factor that in, and that's what I mean in terms of weighing up if the limited company route is actually in the first place even right for you. But once you've made that decision, you just need to make sure that you are complying and adhering to the additional responsibilities that come with that. Now, another tip is to make sure that you get specialist advice on your mortgage options. Now, of course, I'm going to mention this as a tip because I'm coming at it from a mortgage advice perspective, because that's what we do, that's what we specialise in here at DM Mortgages. But the reason I'm specifying this as a tip when you're certainly buying using a limited company is because the high street is not usually the best place for you with limited company mortgage lending. It's often specialist lenders that are going to be able to accommodate this type of lending. Now, the other reason why I say get specialist advice is because there are buy-to-let specialist lenders that don't even deal with the general public. They will only offer their products through intermediaries, through brokers like ourselves. So, for example, The Mortgage Works, they are part of Nationwide. They are a buy-to-let specialist lender, arguably one of the biggest. They only operate through intermediaries. So again, you would be missing out on those deals if you didn't get intermediary help and advice when you're looking at limited company. So it's really important to get specialist mortgage advice, and that's where we come in. We can help. Head over to our website and book an appointment if you are in a place to start making that investment. Specialist advice is also really important because, again, you want to make sure not just your personal circumstances fit the lender's criteria, but the property you're buying. Assuming you're buying an investment property, you know, if you're buying a flat, for example, some lenders might need a higher deposit with a flat. Some lenders may not lend on a flat if it's above a certain floor. Some lenders may insist on no communal balcony access. You know, there's lots of tricky things that concern the property itself where you need to make sure that you just get specialist advice. So guys, head over to our website, dm.mortgage, and book in today for a free of charge appointment if investing in a limited company is something that you are keen on doing. And we can help you to find the best mortgage deal from thousands of products. And we do deal with lots of specialist lenders that do lend on a limited company basis. So head over, book in for an appointment today, and we can help you and give you your options. Of course, if today's video has been useful, make sure that you hit that subscribe button and the notification bell so that you never miss a future upload. And I'll see you in my next video.